Hi everyone, welcome to our first chapter, Fundamentals of Cryptocurrency and Trading. Before we start, let me ask you, have you ever imagined earning money even when you're asleep? That's what we call passive income. And one of the safest ways to do that in the crypto world is through funding rate arbitrage. In this course, we're going to learn how to build low-risk, stable returns from the crypto market without guessing prices or gambling on luck. But before we get into the strategies, let's start with the basics, understanding what cryptocurrency actually is and how trading works. What is cryptocurrency? So, what exactly is cryptocurrency? It's a digital form of money that exists only online. No coins, no paper notes. You can't hold it, but you can own it, store it, and send it anywhere in the world instantly. Crypto works on a technology called blockchain, which records every transaction in a transparent public ledger shared across thousands of computers. Unlike traditional money like USD, Euro, or GBP, cryptocurrency is decentralized. It's not issued or controlled by any government or central bank. Instead, it's verified by a network of computers called miners or validators. Every crypto wallet comes with two keys, a public key, which is like your account number, and a private key, which is like your password. You can safely share your public key with others when you want to receive crypto deposits. It simply tells the network where to send the funds, but your private key must always stay secret. Whoever holds the private key has full control of the money. They can move it, spend it, or even empty the wallet. So always remember this golden rule in crypto. Not your keys, not your coins. If you don't control the private key, you don't truly own the crypto. Many people keep their crypto directly on exchanges because it's convenient, you can log in, trade it instantly, and don't have to worry about managing private keys. But here's the truth, storing crypto on an exchange doesn't mean you truly own it. When your coins are on an exchange, the exchange holds the private keys, not you. You're basically trusting the platform to keep your money safe. If that exchange ever gets hacked, freezes withdrawals, or even shuts down, your crypto can be stolen or lost forever, and there's usually no way to recover it. That's why experienced traders always say, keep your trading funds on the exchange, but your savings in your own wallet. In our next lesson, I'll show you how to create your own crypto wallet so you and only you have full control of your assets. In our upcoming lesson, I'll show you step by step how to create your own crypto wallet and how to back up and protect your keys safely. Let me ask you, if you lose your bank password, you can reset it, right? But in crypto, if you lose your private key, your funds are gone forever. That's why security and backup are so important. Now, let's look a little deeper into the key components that make cryptocurrency work. Understanding these concepts is super important. Once you get these, you'll really see why blockchain is such a powerful innovation. Let's start with the blockchain itself. Imagine blockchain as a chain of digital boxes. We call each box a block. Every time a new transaction happens, like someone sending Bitcoin to someone else, that transaction is recorded inside one of these blocks. Once a block is full of transactions, it gets permanently locked and attached to the previous block, creating a chain of verified records. That's why it's called a blockchain. Now, here's the magical part. Once a block is added to the chain, it can't be changed. You can't go back and edit or delete old transactions. That's what we call immutability, and it's what makes blockchain trustworthy. Think of it like a digital notebook that everyone in the world can read, but nobody can secretly erase or rewrite. It's permanent, transparent, and verified by the network. Next, let's talk about mining or validation. This is where computers called miners or validators work to confirm transactions and secure the network. When you send crypto, your transaction isn't instantly confirmed. It first enters a pool of pending transactions. Then, miners compete or take turns to verify those transactions and add them to the blockchain. In Bitcoin, this process is called proof of work. Miners use computing power to solve complex puzzles, and whoever solves it first adds the block and earns some Bitcoin as a reward. In Ethereum and many other blockchains, it's now proof of stake, where validators lock up their coins as a form of security and are chosen to confirm transactions based on how much they've staked. This process not only confirms transactions, but also protects the entire system from hackers. Because to cheat the network, you need to control more than half of all computers verifying it. And that's almost impossible on a large blockchain like Bitcoin or Ethereum. Now let's move on to decentralization. This is one of the most revolutionary ideas in crypto. In the traditional world, your bank, your credit card company, or your government controls your money. They can freeze your account, block payments, or delay transactions. But in the crypto world, there's no central authority. The blockchain runs across thousands of computers worldwide, and no single company or person has control. If one computer goes offline, the rest still keep the system running. That means the network is censorship resistant and always online. It belongs to everyone and no one at the same time. Now let's talk about transparency. Every single transaction on the blockchain is publicly visible. Anyone can check it, anytime, from anywhere. If you send Bitcoin to someone, that record is permanently visible on the blockchain. You can see when it happened, how much was sent, and which wallets were involved. Of course, you don't see real names, only wallet addresses. So your personal identity stays private, but the financial record itself is 100% open for everyone to verify. This transparency is one of the biggest strengths of blockchain technology. It's what makes cheating, fraud, and corruption incredibly difficult. In the old system, we need to trust the bank or the government to keep records accurately. But in crypto, we don't need to trust, we can verify. And that's the key difference. So let me ask you, why is transparency so powerful in finance? Because it removes the opportunity for corruption, prevents hidden manipulation, and builds trust in a system that doesn't rely on any one person or company. When you put all these pieces together, blockchain, mining or validation, decentralization, and transparency, you start to see the full picture of how cryptocurrency works. It's not just digital money. It's a completely new way of recording, verifying, and trusting value around the world. And this is the foundation for everything else we're going to learn, from trading to funding rates to low-risk arbitrage. All right, now that we understand what crypto is, let's look at the different types. The first one is Bitcoin, BTC, the original cryptocurrency launched in 2009. It's often called digital gold because it's scarce and valuable. Only 21 million will ever exist. Next is Ethereum, ETH. This one introduced smart contracts, which are self-executing agreements on blockchain. It allows people to build apps, games, and decentralized finance systems, or DeFi. Then we have altcoins, short for alternative coins. These include thousands of projects like Ripple, XRP for payments, Chainlink for connecting data, or Solana for high-speed networks. And finally, stablecoins like USDT, USDC, and DAI, which are pegged to fiat currencies like the US dollar. They're great for storing value without worrying about price swings. So here's a question for you. How many altcoins do you think exist today? A few hundred? Actually, it's over 10,000 and counting. You can check them anytime on coinglass.com or coinmarketcap.com. Exploring CoinGlass. Let's make this lesson a bit more practical. Open your browser and go to coinglass.com. We'll explore it together. CoinGlass is a free website that tracks live crypto data prices, volume, and funding rates, which we'll use later for our arbitrage strategy. Once you're on the site, click the Markets tab, then choose Crypto Ranking. Here, you'll see all the major cryptocurrencies ranked by market capitalization. Take a moment to look at the top 10. you'll probably see Bitcoin first, then Ethereum, and several altcoins like BNB, SOL, or XRP. Now, click around, look at columns like market cap and volume, which coins are rising, which ones are falling. This gives you a sense of where the trading activity is happening. If you switch to the funding rate view, you'll see data from exchanges like Binance, MEXC, and Bitunix, showing their current rates for each coin. Don't worry if you don't understand the numbers yet. Just know that these rates are the foundation for how we earn in funding rate arbitrage. Later, we'll use this exact data to find low-risk, profitable setups. So remember, CoinGlass is your real-time crypto dashboard. Bookmark it now, because we'll come back to it again and again. Why cryptocurrency matters. Now that we've seen what cryptocurrency is and how we can track it using tools like CoinGlass, let's take a step back and ask a deeper question. Why does crypto matter so much in today's world? Think about how traditional money works. If you want to send money overseas, it often takes days, you pay high bank fees, and sometimes your transfer can even be rejected without a clear reason. Cryptocurrency changes that completely. You can send value instantly to anyone, anywhere in the world without needing permission from a bank or government. It's borderless, fast, and transparent. And that's what people mean when they say crypto gives us financial freedom. Now let's talk about financial inclusion. Did you know that over 1.4 billion adults worldwide don't have a bank account? But many of them do have a mobile phone and an internet connection. With crypto, those people can store value, receive payments, and even start businesses all from their phones. It's like giving access to the global economy to everyone, not just the privileged few. Then there's transparency and security. Every single transaction on the blockchain is recorded publicly. You can't hide it, you can't erase it, and you can't fake it. That makes fraud, corruption, and manipulation much harder. In a world where trust is often broken, blockchain rebuilds trust not by words, but by math. And of course, crypto isn't just about payments anymore. It's about opportunity. People can now earn money in new ways through staking, where you help secure a network and earn rewards, through lending or DeFi protocols, where your crypto works for you like savings, and through funding rate arbitrage, a strategy we'll master in this course, where you can earn steady income regardless of whether prices go up or down. So let me ask you this. Can you see how cryptocurrency is not just another investment trend? It's something much bigger. It's a movement toward empowerment, independence, and innovation. It allows anyone, no matter where they're from, to take part in a global financial system that runs 24/7 without barriers, without discrimination, and without permission. That's the real power of crypto. It's not just about making money, it's about changing how money works. And that's exactly why understanding blockchain technology is the first step toward building your own freedom in the digital economy. Understanding crypto foundations. All right, let's do a quick recap before we move on. Cryptocurrency is digital, decentralized money powered by blockchain, a technology that records every transaction transparently across the world. If there's one big takeaway from this chapter, it's that crypto removes the middleman. There's no bank, no government, no single person in control. Instead, the system itself, through blockchain, keeps everything secure and trustworthy. Some key words to remember are blockchain, decentralization, mining, and keys. These are the building blocks that make crypto work. You've also met the main players: Bitcoin, Ethereum, altcoins, and stablecoins. Each has a different role. Bitcoin stores value, Ethereum powers smart contracts, altcoins explore new technologies, and stablecoins bring stability into the system. Everything we learn after this, like trading, funding rates, and arbitrage, all builds on this foundation. So, if you understand what crypto is, how it works, and why it matters, you've just taken your first real step into the world of digital finance. In the next lesson, we'll go from theory to practice. I'll show you how to set up your first exchange account and how to safely deposit and transfer USDT between platforms. Ready?